Every day, trillions of dollars crisscross the world via a network you've never even heard of. It's called SWIFT. It's old, slow, and costly. Then came along XRP, a digital asset promising instant settlement, ultra low cost, and a path to bypass SWIFT entirely. But the question is, can XRP replace SWIFT? Or is it just a fast promise in a system built for decades? Stay with me, because what's at stake isn't money moving faster, it's the backbone of global finance being challenged. SWIFT is the messaging backbone of global cross-border bank payments. Over 11,000 financial institutions in 200 plus countries use SWIFT. But SWIFT's model is based on pre-funded correspondent bank accounts, messaging and multiple intermediary banks, making transfers slow, often between 1 to 5 business days, and costs very high. The structural dominance of SWIFT is enormous. Its network effects, institutional trust, regulatory compliance, and global reach create a very high barrier to disruption. Now, XRP is the native digital asset for the XRP ledger. It was designed for fast, low-cost, cross-border settlement specifically as a bridge currency to reduce the need for banks to pre-fund foreign accounts. And key advantages include settlement in seconds, very low transaction cost, and high throughput. Ripple's on-demand liquidity uses XRP in some payment corridors to facilitate liquidity and settlement efficiency. The promise is banks don't hold large reserves in multiple currencies. Instead, they use XRP to move value instantly and convert at receiving end. Now, some in the industry argue that XRP could challenge or gradually capture a meaningful share of SWIFT's cross-border payment business. For example, projections of XRP capturing up to 14% of SWIFT volumes in 5 years have been cited. And in other analysis pieces, users note the narrative of XRP replacing SWIFT is strong among believers, but also contested amongst critics. The argument does have appeal. Legacy systems plus blockchain rails equals cheaper and faster payments, but the real world is never so simple. Now, there are a number of major hurdles that XRP faces if it was to replace SWIFT. Number one being institutional and regulatory entrenchment. SWIFT is deeply integrated. Changing rails involves banks, compliance, regulation, and legacy contracts. Banks, by their very nature, are risk averse. They prefer known systems, neutral intermediaries. XRP's volatility and regulatory history remains issues. Number two is network effects and systemic trust. SWIFT's ubiquity equals trust. XRP would have to replicate that at global scale across thousands of institutions. Even if the technology is superior, the migration cost and systemic inertia are massive. Number three, regulatory and legal clarity. XRP has faced regulatory uncertainty, and that introduces institutional caution. The payment systems must satisfy know your customer and anti-money laundering regulations, cross-border compliance, and central bank oversight. Number four, competition and legacy system upgrades. SWIFT is not standing still. It is developing a blockchain-based ledger to modernize its services. That means XRP isn't just facing legacy SWIFT, it may also be facing a modernized SWIFT. Number five is use cases and liquidity constraints. While XRP has pilots and infrastructure, the scale is still small compared to trillions of dollars moved by SWIFT annually. Liquidity, token dynamics, and volatility all create adoption friction. Rather than a full replace, a more plausible scenario emerges. XRP becomes a complementary rail for companies and cross-border settlements in selected corridors, especially high-friction, high-cost ones where incumbents are weak. SWIFT persists as the global messaging backbone, while assets like XRP serve as liquidity bridges or value transfer layers on top of or next to SWIFT. Incremental adoption. Banks might use RippleNet/XRP in tandem with SWIFT rather than switching off SWIFT entirely. And over time, the payment infrastructure may become multi-rail, meaning various technologies interconnect. XRP may carve a niche within that. So instead of XRP replacing SWIFT, the reality is more likely that XRP changing how SWIFT and other settles value. Now, it's tempting to believe in the simple story. New technology wipes out old systems, XRP replaces Swift, and payments become instant, free, and borderless. The truth is, systems built over decades don't just vanish, they evolve, adapt, and resist. XRP has the tech, it has the promise, but to actually uproot Swift would require more than speed and cost. It would require trust, regulation, global coordination, and institutional buy-in. So ask yourself, do you expect one coin to overturn a global network overnight, or do you expect a quiet revolution? A parallel rail building in the shadows, streamlining value beneath the surface? Because whichever answer you pick, it changes how you see XRP. Not as the giant killer, but as the silent disruptor. And maybe, just maybe, the future of global payments will be built on more than one network. XRP might not replace Swift, it could just redefine its purpose.